This one setup made me over $5,000 just this week. And the crazy part is, most traders see this on their day-to-day trading, but usually ignore it. I only took 2 trades this week, but every single entry came from the exact same setup. And today, I plan on showing you guys that setup. So in this video, I'm going to break down how I find it, why it works, the mistakes traders make when trading it, and how I manage my risk around it. Let's get straight into the video, guys. So as you guys can see over here, my current P&L on this account is $4,000. And if I go into my other account, my current P&L is 5K. So just this month, I've almost made $10,000. So as you can see last week, I did hit a 2.275K, and I also done a break even on one of my accounts, and the other account I made 1.5K and 1.2K. I did try to run up the trade on the previous one, but it did tend to hit my break even and continue going my direction. So yeah, as you guys can see, let's just make it simple here, right? Week one, $1,000, $13, 1.1K dollars, 2.8K this week. We go into the other account, minus 1%, plus 2%, break evens on the last 2 weeks. So as you can see, it's fairly profitable. 4K this month on one account and 5K on the other. So I'll be breaking this down for you guys. It's so easy, it's so simple. So as you can see, this was the previous days. We was in a consolidation range, which I did tend to lose one, but won two. As you guys can see here, we was in a range for the last 8 days, but that's okay. We did break out, and then we had a continuation going bearish. So this was my trade that I took that made me over 5K. As you can see, it's going bearish. And then my initial thought was maybe we'll come and tap this zone back to retest at 4650, but we didn't end up doing that on Monday. I do not trade on Mondays, so that's okay for me. A big low, then we was also making a lower high, and then my anticipation was to make a lower low. It's pretty simple, right? Because as you can see, gold has been going bearish, but no one actually realizes it. But I've already been there, done that, and realized a very long time ago that golds are currently in a downtrend and we are shorting. So just a fairly simple trade: lower low, lower high, continuation for the lower low. So my reasoning as to why I did take this trade, clearly we did come and have a breakout. We did come back up, make a lower high, and create a lower low. So as you guys can see, we was in a consolidation market for 4 days. So I wasn't trading this range, clearly. And the reason as to why I wasn't doing that is because of this little support zone here on the 1 hour, right? But the reason why I did take this trade and I knew that we was going to continue breaking these lows was a fairly simple thing. So I trade New York Stock Exchange Open, which is 9:30 a.m. New York time, 2:30 p.m. London time, and 9:30 p.m. Philippines time. I'm currently in the Philippines, so that's my time for trading, 9:30 p.m., which is fairly late, but it's okay. So if we go into the 30 minutes, I can break this down for you guys, fairly simple. As you can see, we've tapped this zone so many times, but it hasn't been during New York Stock Exchange Open. So my reasoning as why this was going to break was because it was a fairly simple trade. We tapped this zone, we came back up to make a lower high, and as you can see, we didn't break this previous wick right here. We didn't break this little wick here. So my anticipation was once we break these lows, we're just going to have a continuation. So as you can see, this was a fairly simple trade. There was no support here, just because New York Stock Exchange open, we tend to be super volatile. So my idea is I'm going to try and get in this trade and have a continuation to the downside, because I know that we are already in a bearish trend. So that is literally all I done. Waited for this setup, had my sell stops, had my stops above this high, and then just shorted. And the reason why I didn't go so low on the shorts is because at the moment the markets are kind of in a range. So it's like I don't need to come and have a big TP. So my TP initially was just to have it at the previous low that we had the day before, basically. And that's fairly what I done. I literally had my, so yeah, I literally just had it under the previous low of Monday. Fairly simple trade, right, guys? Easy trade. And then obviously on that day, Trump did speak, or the day after, Trump did speak, and the markets tended to just rocket up 900 pips, but it is what it is. Then It's literally the same thing, guys. The same thing happens. Like, I'm going to show you now the exact same trade setup, exactly happened at the same time. We did create the lower lows and then lower highs, and we're just basically in a range now, okay? So as you guys can see here, if I go into the hour now, we are in a range. Yeah, fair enough, we are trending downwards, but in a sense, this whole thing here, this whole section is a literal range, okay? Okay, so for this trade over here, as you notice, guys, we didn't break these lower lows, okay? We have two lower lows here that haven't been tapped or broken. So my opinion is what I'm going to do is I'm going to trade this range. So what did I do? Now, this was at 3 p.m. I didn't trade on this day. 3 a.m. So let's say Asia open, we calm down, we go bearish. Even on London session, we go bearish. We're just creating lower lows for a lower high. Yeah, we're creating lower lows to basically have a lower high because we're not going to break these lows. So let me give you a breakdown on what I've done. It's a fairly simple trade. I didn't take the full RR on this. I did take about 1.5 RR, but I'll just break it down for you guys simple because this is 6 p.m. London time. I would be asleep. So the reason as why I closed, and it was a fairly short trade, I closed at 1.5 RR just because I got a bit late and basically the markets wasn't moving. So I just closed at a 1.5 RR, which is still good for me. So basically, as I was saying to you guys, let's continue. Nothing's broke. Structure's not broke. We're not breaking these zones. Even here, we didn't break. So basically, what I done was I knew that this was just correction to continue going bullish. Most people probably see this gap and be like, this is fair value gap. I'm going to trade and short down here. But you're all wrong. I'm sorry. Your fair value gap is a bunch of bullshit. Sorry to break it to you guys. And your FVG, GGG, they're just making up terms of trading, basically. They're just coming up with nonsense and making up their own terms to tell you guys something. So, as you can see, what happened was 2 p.m. We continued going down. What happened? I knew. So 2:30 opens. We continue going bearish. So a lot of people think, oh my God, let's continue shorting. The markets are going down. This is a downtrend, guys. Oh my God, we're literally going down, guys. This is a downtrend. So my opinion is let everyone think that this is a downtrend while I'm gonna buy. Okay. So as you can see, we didn't break. My opinion is we're going to have a pullback. And then because it's 2:30, a lot of liquidity is coming in now. A lot of traders are waking up to start trading. So a lot of people are shorting. Then I know that the people that are 9:30, New York Stock Exchange open, these guys ain't going to take shorts. They see that we ain't broke this previous low at the time. So what do? As soon as we come back up and we basically cross this previous candle, we take longs, and what do? Once we take longs, we put our stops below this low, and then we just continue it up to the previous high. But clearly, now I know, we delete one, now I know we are not coming up to this previous high. Why? Because we're still on a downtrend, okay? I trade what I see, guys, and this is what I see. This is what works for me. As you guys can see, this month I haven't lost. I've lost 2 trades this month. All right. And how about on my other account? I've lost 2 trades this month, guys. So I'm pretty sure what I see is correct. Okay. Now, basically, that is the fairly simple trade that I took. Okay. Now, I've got a PDF for you guys that's free. It's on psychology tips that you guys need. Maybe I'll do a risk management tip as well. So let me give you guys a little rundown now on how I do my risk. So 1% risk on the funded accounts. Initially, I could have my stop loss below this low, right? 4488. But the reason as to why I don't do this is I would rather have a bit more room and risk that 1%, meaning that when I do take a trade, if it does come and it does tap me, I can basically decide whether I want to close now. So, I will close full position, so I only lose 0.5% rather than losing 1%, which means for me, when I do take a trade, and it does continue going my direction, regardless if I take a 1-to-1, majority of the time I'm losing 0.5% to gain 1% because of my stop loss. So yes, my stop loss should be, for example, let's say now I'm taking these longs over here, right? and I put my stops here, and then I put my TP at the previous support and resistance zone, let's just say, for example, 3 to 1. Now, initially, swing traders would put it down here. Intraday traders would put it at 4466. But for me, I would rather give it a bit of room. So if it does actually come down here, my opinion is wrong and my chart work was wrong. So I would probably just close it. Now, when I do close it, for example, let's just say my stops are here. When I do close this, it's 150 pips rather than me losing a full 260 pips, which means that I'm losing a bit over 0.5 to 1%, 0.5%. So I hope that makes sense to you guys on how to actually manage your risk and what works intraday trading. A lot of people don't know how to trade a ranging market. So if you guys want more videos on a ranging market, I will teach you guys how to trade a ranging market, because I'm going to be honest with you guys, okay? Majority of the time when you're trading, like apart from like February, March, April, where you can clearly see a trend, majority of the years, during these times, when like after them times, a lot of the times the market is basically in a big correction for the year. And also it does range a lot because there's not a lot of volatility in the market. So for me, I need to teach you guys how to trade ranges so you can consistently actually trade. I only take 2 months off out of the year. I take off December and January. Sometimes I take off August, depending on how slow the markets are. So I know this is a long video now. Fuck me, 15 minutes. This is a long video for you guys, but this is just a full breakdown on how to actually trade downtrends and range of markets. As we can see, like on the big time frame now, if we go into the daily, yeah, this is a correction. I understand that we could hit a double top, double bottom at 400, and then we're going to continue going back up to the all-time high. But for me, I've been shorting since where?